Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter for January 27th, 2024. The month is over, almost. And if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market had another record-breaking week with the major indices. New highs once again almost every day. Market's waiting for the Fed meeting this coming week, but this market is looking just a little tired, and we're going to show you why. In our weekly stock analysis video, LPL Financial is the largest broker-dealer in the U.S. They have thousands of investment advisors and money managers under their umbrella. And this stock is up 250% over the past 5 years, which, folks, is not too bad, is it? In our ETF video, well, our top stocks and our favorite ETFs are doubling the S&P once again. And, folks, it's only January. If we keep this up, we will have another banner year with our top stock picks in our ETFs, in our favorite ETFs. All right, let's look at the S&P 500, and here we are with the volatility bands, and the center line in here is the 20-day moving average. And you can see we went up to the top, and anytime you break through one side or the other, in other words, the top or the bottom, that means a pretty strong market in one direction or the other. Or if it's in the bottom, it's a very weak market one way or the other. So anyway, we broke through the top last week, and boy, we've been through that top almost every day, and I'm recording this just about an hour before the close on Friday, and folks, it's sitting right there at the top, and the Fed is going to meet next week, and that's what this market is waiting for. And it had some not so good news from some of the big stocks, Intel and Tesla for one, and Visa, which said that the spending is slowing down for folks and they're using their credit cards. So we have a little bit of weakness in the market here, a little bit of hesitation over the past couple of days. I don't want to call it weakness. And down here, well, that blue line is up over that red line, so that's not too bad at all, is it? That's in the buy territory here. But yet we worry about this market being up near that top there and waiting for a little pullback. See if there is support at this 4,800 level in here, which is the top that was reached, we're looking at about 2 years ago, folks. So yeah, we do expect it to come down and test this area in here for support. And let us look at the S&P on a different chart. And here's what's bothering us. We have the market making higher highs in here. And we showed a lot of this in our ETF letter with some of the ETFs that we're watching that are our favorite ETFs. So we have a higher high in the market here. And if the market turns down, we will have a lower high up here. And that's a short-term sell signal. And down here, these vertical green lines represent the market volume when the market closes up for the day. And that's all we see down here are green lines. And that's very, very good. And down here, our intermediate term indicator is still pointing up. And so back up in here, here's that previous high again that we're looking at, and we would like, well, the market would like to see it come down and test that, use that as a line of support rather than back here and 2 years ago a line of resistance. So we're looking for a test of this line and the 20-day exponential moving average right in here. If the market does come down to test this line, it takes a couple of days to do that. It will meet this 20-day moving average. So there'll be two areas of support. And if that holds, folks, we don't have to worry about the rest of the year. Being a little facetious here, but that's how important that particular line is right in here. Now, when we look at the QQQs, we're looking at the same thing again. This might be a slightly lower high in here while the market is making a higher high. So lower high here, higher high here is not too good. It's a slight divergence to the downside. And of course, it wants to come down, meet this line in here, and meet the 20-day moving average. Now down here, Gee, is that a little turn to the downside with this black line? Because if it does turn down, that would give us a bearish signal in here. But that's a lot to do, folks. So the market is waiting for next week with the Federal Reserve, and we'll see what happens from them. Between now and then, we just don't expect too much out of this market. And when you look at the Dow Jones Industrial, you can see we're getting those lower highs in here as the market ekes out higher highs in here. 20-day moving average right there. And down here, is this black line going to turn up over the red line to give us an all-out buy signal, or is it going to bounce off it and turn down? So those are really, really good questions, especially with this Fed meeting coming up, because the Fed will give us a slight indication of the March meeting or the June meeting, or if they will start easing up on interest rates, and who knows whatever they're going to say, but we're pretty sure it will be positive, if not neutral, for the market. And all our signals have turned up, so we're not worried about that. We don't have any hedges on the portfolios that want hedging, and those that are always hedged are doubling the S&P 500 and being fully hedged. And we're talking about our ETFs, we're talking about our 30 stock growth portfolio, and the triple ETF that we formed out of the QQQ top stocks, the semiconductor top stocks, and the technical ETF top stocks. So with those hedges on, we are still beating the S&P 500 and fully hedged. So, and if we're not hedged, we're doubling the S&P 500. So folks, you take it as it comes, and we will too. So those of you who always want portfolio protection for disaster insurance, about 12% below the market, nice and cheap, and very, very inexpensive. And that's what I mean by cheap. Very inexpensive, especially these April 410 puts, about 12% under the market. Very, very nice. So those of you who don't mind think about your car insurance that has a deductible on it. So this is the market portfolio that has a deductible on it of about 12%. And after that, if it does fall that much, these puts kick into action and become worth a lot of money as the market declines. So whichever way you look at it, we just had a fantastic week this past week, folks. We've had a great month, and we had a great 2 months before that. So we have 3 months in a row where we've had the market up every week except one. And so we're very, very happy about that. So being happy means you can go to the beach, you can go for a walk, folks, nice and calm, water out there, beautiful sunshine. So you go out this weekend, you take it nice and easy, clear your head of the market, be with your family, be with your loved ones, have a nice Sunday dinner together, because guess what? Next week, the market will still be here. Okay, folks, you go out and you stay safe, and we'll see you next time.